questions that have come in recently about IRAs, and one specific question that I want to answer from a message I got from one of our members here was what is an IRA, how can I use it, and can I use what's called a self-directed IRA to fund my real estate? So we're going to be talking about that, and I'm going to be sharing my screen. I'm going to be covering first of all, what a self-directed IRA is. So Equity Trust is the company name. You can check them out at equitytrust.com. First, I'm going to, maybe like do a little reading lesson with you, a reading overview of what a self-directed IRA is. So let's go over that first. It's a tax advantage retirement and savings account. Okay, it's technically the same tax advantage account you may find at any brokerage firm, custodian, or bank. Okay, but the difference between a self-directed IRA is that you can invest in a wide range of alternative assets, such as real estate, promissory notes, and private equity, in addition to traditional investments such as stocks, bonds, mutual funds. Okay, so traditionally, if you go to some kind of tax saving IRA, or IRA, typically what people know is 401k IRA and that kind of stuff, right? So that's what typically most people are familiar with. What that just goes into like a fund, typically ETFs, electronic traded funds, or some mutual funds, right? So that's typically what it goes into. However, here with the self-directed IRA, you have some alternatives, aka most popular here in our group is real estate, okay, and also as notes as well. Private equity. So what are the benefits? Let's cover what are the benefits of having a self-directed IRA. Number one, you are in control. Okay, so you actually can move in, move out. And if you do it in a 401k and send it over to a brokerage house, it could be Fidelity, Waterhouse, who else? I mean, there's so many, JP Morgan, I can go on and on, right? There's so many brokerage houses. They are in control. They're money managers, fund managers. They're going to manage your portfolio for you, right? However, in this way, in a self-directed IRA, you are the one managing it, okay? So you direct the investment choices. Next is a diversified portfolio, meaning you can have different types of, asset classes inside of your portfolio, okay? So it gives you unlimited options. Next is the tax advantages, such as investing in tax advantage accounts, such as a self-directed Roth IRA or traditional self-directed, provides you with potentially opportunity for tax-free or tax-deferred profits. Okay, so there is the same as tax advantages as you would get in a Roth or a regular traditional. Sometimes they're taxed after, sometimes they're taxed as they go in. So you have those advantages as well. And then build wealth for future generations, allow the beneficiaries to receive the account's assets after the account owner's passing. So as you pass, you can pass this on to your beneficiary. Okay, let's talk about the fees to make this happen. I think Equity Trust has great fees. There are some companies out there that are a little cheaper. I love showing the fees, by the way, and pricing for anything that I show. However, I think Equity Trust is perfectly priced for the marketplace for what you get. So here is the account setup fee, which is an online application of $50 account setup fee, online application $75, and then here's the fee schedule. So this is based on your portfolio value. Very simply, up to $100,000, you have $400, and then anything over $100,000, as you can see here, $500,000 and above, $1,680. And then $1 million plus, you're at over $2,000 for an annual fee schedule. Okay. Annual fees are assessed first of the quarter and so on and so forth. You get the idea. Here are any termination fees, which are not very high if you are planning on terminating. Listen, I've had these waived before, not me personally, but I know people who've had these waived before. Excuse me. I've helped people to get these waived. So you could do that also. There's that. So let's go back into here, how to get started, right? How to get started. You can see here the different open a traditional Roth IRA. You can open up a health savings fund account or a CESA. Open up a simple IRA or a SEP IRA. This is kind of common. This comes up pretty often for a lot of people. The SEP is the Simplified Employee Pension. So there's different options on here. But guys, listen. I know you probably wonder, well, Nathan, which one should I choose? What should I use? Here's the beautiful part about this. You give them a call and they will help you out. They will help you out, get your strategies in place, okay? But one of the most important things that I think for this group and for what we offer, what they offer to us as real estate investors, is the real estate mortgage and notes. Real estate and mortgage and notes. That's one of the most things. Oh, they just added cryptocurrency. That's really interesting. So that's one of the beautiful thing about this, using a self-directed IRA, because you can use real estate. Now, you won't typically find IRAs in the marketplace that talk about this stuff. You're probably wondering, hey, I've never heard about this before. I don't know any brokers that talk about this stuff. Yeah, because this is an alternative option. It's like alternative medicine. Most people, like for example, when I went to the hospital, that's typically where people would go when they got sick, but that's actually not the first place I went. I didn't go for an x-ray first. I actually went to an osteopath first. So that's called alternative medicine, right? And then this equity trust, or let's say a self-directed IRA, is alternative IRAs, okay? So traditionally you would hear an IRA would typically be the 401k, 401, and there's a whole bunch of them, 401b, there's a whole bunch of lists, but typically people know the 401k plan. More recently, people are hearing about the HSA. Again, the benefits of having a self-directed IRA and using the moving money in your IRA is, well, let me give you an example. Very simple example. If you're wholesaling real estate, right? And you make a $10,000, I'm going to keep it really simple. You make a $10,000 profit in your business, okay? If you make that $10,000 in your personal name, you're going to get taxed personally. If you make it into your business, you're going to make it or like an LLC, which flows into your personal, your personal income. Or if you make it in like an S Corp or a C Corp, however you're structured, you're going to have to work on this, taxes. But however, here's the thing. You can use a self-directed IRA and move the profits of your deal into a self-directed IRA. Okay, that's the beauty of it. So if you want to look at it this way, imagine you are working a job and your personal income gets moved over into your 401k. However, when you do the job of wholesaling a piece of real estate, you can move it into a self-directed IRA. Does that make sense? Does that make it a little more clear? See, that's really the difference between the two, is you have the opportunity to move the income into an IRA, even though it's real estate, even though maybe it's selling a note or private equity or maybe some trading accounts like you see here, foreign or currency, currency exchange, foreign currency, the exchange accounts, right? So maybe it's even that. If you're doing that, anything that's creating income, you can move your funds into a self-directed IRA, okay? Because normally you can't move this stuff into a self-directed IRA. Into your 401k, let's put an example, right? So you can't do that. Those are traditional accounts. So hopefully that makes sense. I would definitely get in here. You can jump right in, explore the self-directed IRA account options we showed you earlier, whether it's for individuals or for a business owner. Depending on where you're at for your business, you might want to check that out, see what the contribution limits are. And let's dive into that, because that sometimes, let's break that down, because most people would know this like from their 401k, which I believe is still, isn't it 6,500? Sorry, I haven't had a 401k in years. So maybe we can jump into that. So let's see what's up for 2021 and get access to this. Okay. All right. So here is a breakdown. Okay. IRAs and other accounts. All right. So here we have the traditional IRA, which is $6,000, right? We have a Roth IRA, $6,000. We have a Roth solo 401k employee deferral at $19,500. We have a simple IRA, which is $13,500. We have a SEP IRA, which is my favorite, which is $58,000. I have two of those, I think, right now. Maybe two or one, I can't remember. the CESA and the HSA single, but typically, I typically hear when people are opening up HSAs, they're pretty much family based. So that's the rates for that. So you see the differences here. Those are the difference. And there's some catch-up options here as well. So, and then you can see the distributions, the contributions. They can be deductible or non-deductible, which, I would, if I was looking at this, I'd look for more of the deductible stuff, right? That is the idea. That is the goal. Here are the deadlines, okay? And then here are the traditional IRAs, okay? If you are covered by a retirement plan at work, here is the what you can do for 2021 and what the deductions, partial and no deductions are, okay? And here's what you can do with a Roth. Okay, so if you look at a traditional one, you have income levels at this right here, different income levels at where you're at. And then if you're not covered by a retirement plan, there's the amount you can right there. All right, so it's nil. All right, and then here's a Roth IRA, which definitely gives you some full contribution amounts right there. Okay, and small business IRA, SEP IRA, or the solo K. So you have your opportunity here to to build. Now, what I've typically found with a lot of people who are in real estate, if I was to just show you these side by side, this SEP IRA tends to be, depending on how you're structured in your business, or a simple IRA. Some people do use Roth IRAs or this Roth 401k. It all depends on how you're structured in your business. Again, hey, I am not a tax advisor. What I would recommend you do is get with your CPA to find out what works best for you, as well as equity trust, find out what works best for you. But here they have all the options that you would need to look over. So I would definitely check those out. Make sure you do get with a CPA and your bookkeeper and get everybody together and figure out what's best and needed for you the most. That way you can make the right decisions for your business in that time. Remember, nothing stays stagnant in this area. So you have to keep on moving and changing with the times, as well as your business keeps growing and growing and ebb and flow as things start happening. What you want to do is make sure that you're taking the right steps. And the reality is with these things, you have to be proactive about it. You can't be lazy with it. You actually have to be pretty proactive with what you're doing, and no one's going to look after your money better than you. I'm going to say that again. No one's going to look after your money better than you are. So you better know about your money and educate yourself about your money and your finances so that you can not only make more of it, but so you can keep more of it. That's the goal, right? You want to keep as much as you can. All right, thanks so much, everybody. If this has been helpful, let me know. You can give this video a like. But if you have any questions, then you can shoot me a message and I will get back to you that way. Or I would definitely reach out to Equity Trust with more additional questions on this topic. And you have their information at trustetc.com. That's trustetc.com. Or just do a Google search for Equity Trust and you'll find them.